over time. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. No Radigan today. He'll be back with us on Monday. But we're here for now to take you through the futures market close at 5 Eastern, 4 Central. If you're on the platform Tasty Live, nope, that's the website, tastylive.com. The website's Tasty Trade. Either way, welcome to the show. Come over to YouTube. Tell us what you're trading, what you think of this action. As Sunagoon said, was my bouncy, boyish joyousness yesterday the sign of the top? Maybe indeed. The NASDAQ did rally up here today, only for a little while before it came crashing back in. We have a Microsoft and Meta earnings jubilation overnight, adding more market cap than, say, the entirety of a Costco or a Netflix, as we see, is eradicated, and then some today, where we do ultimately get a move and close below yesterday's low. Ooh, so spooky. An engulfing bar. Key reversal at the end of July, heading into the seasonally most bullish time of the year for volatility. Ilya, Microsoft and Meta did make a ton of money, but the market today decides to take some profits. We see a NASDAQ surge to new all-time highs and close below yesterday's low, which is among the worst things that could happen. If you are a bull and have been riding this Icarus into the sun, the wings have, technically speaking, perhaps melted off at this point in time. But we do have Amazon out here after hours. And before, Ilya, we go into this price action for today, I do want to go to the chart. Those earnings are better than expected across the board, which is what makes this reaction, Ilya, as you pointed out, all the more interesting. They beat on EPS, $1.68 versus $1.33 expected. That's a 33% beat. Their revenue is $167.7 billion versus $162 billion expected. Another fantastic beat. The guidance for Q3, the high end was $173 billion. They've guided for $174 to $179 billion. And AWS, which contains their AI efforts, $30.9 billion, 17.5% growth. Ilya, even Amazon here with its strong earnings in the mirror and reasonable growth expectations moving forward, the market is not running with this either, despite bidding it higher all day. We await Apple in a few moments' time, not just yet. But as a bear's bear, as someone tweeted at me today, you were probably feeling really good.
As we were talking about those spikes on the Meta earnings and the Microsoft earnings exactly 24 hours ago now on yesterday's show, my concern with that exuberance was that what happened earlier in the day was the market's displeasure with the Fed, and the exuberance was coming on the back of catalysts that were perhaps short-lived. Those earnings were undeniably impressive, and we didn't learn in them anything that the markets hadn't known. What we learned was perhaps that the forecasts were woefully inadequate, but that was just about it. And what I was concerned about was that the story with the Fed was a bigger story, and that we had to be careful before we over-extrapolated a move in absent liquidity before the Asia Open even got underway. And indeed, things held up. They held up in Asia, they held up in Europe for the most part. And then when the US market came in, the price action told you very clearly what they thought. And the whole thing caved in on itself. So this was exactly the thing that I wouldn't say I knew that it was going to happen. Of course I didn't. Nobody could. I was concerned that it might, because the price action around the Fed and the remaining event risk for the week really did look potent. And of course, the event risk is relevant. So what the markets are telling us here, seemingly, is that good news is unable to impress. And that is more bearish than if the markets were falling on bad news. And that should be a point of concern for risk sentiment all around.
Amazon here, 228 now, right after hours. That action today in the NASDAQ, very brutal. You were asking me what, hopefully I got out of my stuff. Partially, over the course of the day, as I was talking with Nick, it's funny, I sent Nick a message this morning at 10:12 a.m. Eastern time, and I said, this thing is either going to close at all-time highs or we're going to close red today. And that seemed nuts at the time. But the read I was getting on the tape was that you were seeing the Russell fail in certain areas. We can
Yeah.
go over to that 15-minute chart just to show.
That thing has been heavy as a rock, obviously, despite the tech earnings where it really couldn't benefit.
10:15 this morning is basically 2240 in the Russell. Why there? Why at that point in time? I would go down to the daily chart, excuse me, the 4-hour time frame here. And this morning we had broken out of a flag and we were trying to get back into it. So if the Russell of all things could get back into its flag, then surely the Nasdaq and the S&P would be okay. That obviously wasn't the case. So we have a turn lower here, which now potentially we do need to consider, as Tom was suggesting, are the bears in control now? Is this a potential marking for a top? We do have tariffs going into play tomorrow, Ilya.
Maybe, yeah.
Do have non-farm payrolls potentially coming out tomorrow morning. Well, they're definitely coming out tomorrow morning, but that is potentially something that could be a catalyst in this market as well. We're still digesting the Fed. Are we in a, for the stock market at least, are we still in a good news is good news world, or is good news bad news now because the Fed won't have an excuse to cut rates? I'm trying to figure out what the thematic narrative is on that lens after this week. I think we're going to have to think about it for a few more days once we see an FP.
Yeah. I mean, in my mind, it's kind of neither. It's middling data is the worst for risk sentiment, because I think the markets very clearly are telling you that they want these rate cuts. There's just no question. The markets are also seeing that those rate cuts aren't going to happen near term. I mean, just look at what the pricing is for Fed funds futures for next year. We're out to 83 basis points. The markets see at least 3 cuts, and they're inching closer to 4. What we see from the Fed, obviously, is only a single rate cut that they've forecasted in June. Obviously, take that with a grain of salt. They're probably half-hearted on the 50 basis points that they projected then for this year, if you hear them yesterday. And the market's obviously now hearing that loud and clear. You can see it in the dollar, certainly, where the markets only have 1 cut maybe for the remainder of this year. We're out to 29 basis points. That's making now September look unlikely by about a 40-60 spread. 60% chance rates actually don't come down in September.
That was perhaps one of the shocking developments of today's market. Post PCE,
yeah,
we have a market that's saying the odds of a September cut are less likely.
That's right. Well, and with that, the worst thing that seems to stand here in the way of markets is jobs data that's weak enough to keep their desire for rate cuts alive, but strong enough to give the Fed cover to delay. And that's probably the worst of all possible outcomes, and also the likeliest of outcomes. Because if you look at the expectations, we're looking for 110K. That's down from 147. It's slower, but it's not catastrophic. It's not anything that's going to get the Fed to go, oh my God, emergency meeting, or oh my God, we need to sound so dovish from here that there is no question about September. And maybe we'll even go big. You would need a catastrophically weak number. You would need something in the double digits, maybe, with a potent rise in the jobless rate. It's already expected to go up, so that bar is high. It's expected to go up from 4.1 to 4.2. If we spike to 4.3, okay, maybe you might start to stir some hope in the markets. But now clearly the market is saying there's a slowdown coming because of the exchange rate in rate cuts from this year going away to rate cuts next year going up by a greater amount. And the markets are very clearly saying here, look, we're not going to be impressed with AI capex. We're not going to be impressed with Amazon earnings. We see a growth risk and we want these cuts. So if you get a number that lets the Fed off the hook on that, sort of in line with expectations, but doesn't tell you, listen, maybe you don't need rate cuts because the economy is fine, that's the worst of all possible worlds.
We're still waiting on these Apple earnings. As soon as they come out, I will relay them over here and we'll go over those Apple charts themselves. Ilya, even though the NASDAQ itself had the benefit of those Meta and Microsoft earnings, you would argue that perhaps it would be a little bit weaker here today otherwise. Even so, the Russell is the biggest loser to the downside, and we're starting to get into a place where if support were to be found, this would be a pretty darn good place to find it. In this current environment, if people want to be bullish, how are they structuring their trades? Are they doing this on like a day-to-day basis and kind of just dipping their toes in the water to see what they're doing from pull to pull, 9 a.m. to 4 p.m.? If you're bearish, do you give yourself a little bit more breathing room? How would you approach this? Because I'm thinking about whether or not how my approach has been for the past few weeks is still viable, which is to say that basically buy NASDAQ calls that are at the money, slightly out of the money, call spreads, and then look long S&P 500 puts at the 45-60 DTE window, if only to hedge off some of that risk. Today's action does kind of scare me. It kind of is like the worst possible thing that could happen after Microsoft and Meta earnings.
Yeah. I mean, I think at this point, you have to listen to the price action first and foremost. And what the price action is telling you today is that the market is shrugging off what a month ago would be unmitigated good news. And when you start this from the premise that you began this week with an upside gap after the world's most important growth engines, at least two of them, the US and the EU, finally reached a trade deal and took that uncertainty off the board. This is most of the world's end demand. If China is the middle step and the third engine in this sequence that really hold up global growth, China is the middle of the global supply chain. Europe and the US are end demand. That's the consumption that keeps everything going. And you got a trade deal there. That is an immensely positive development for global growth. And we're down on the week across every major stock index. So that was a tell early. The Meta and the Microsoft earnings being a flop, despite having lifted those stocks. I mean, Meta is up almost 12%. It's not like the market doesn't think the data was good. It's not like the market perceived some sort of a tarnish in the results. No, they were a complete positive as far as the markets were concerned. And that could not hold up overall sentiment. I think at this point, the market is telling you very clearly that there is a tendency here emerging towards some kind of distribution. And so while you don't want to run in front of a market that fundamentally doesn't like going down, the US equity market is generally that way. And I would argue equity markets are that way in general. They're biased. When they do go, they go because it becomes a fire sale. And so looking at the situation now, I think you look at the Russell, you're directly at support at about 2210 or so. It's probably not attractive to be a seller right here, but you get a breach of this support and you might have an avalanche underneath it. It's a similar story with the S&P, where if you're looking at the September contract, then 63.30, 63.45, something like this, former range resistance turned support, is now very much under fire. You get through that, again, danger. If you look at the NASDAQ, you have what is a very scary looking engulfing candle on the daily chart. at this point. And you have very little defense. You have something maybe around 23,000, something else maybe around 22,800, something like this. But at this point, you're very much looking like a top is a live risk. And again, you're near, in the near term, former resistance turned support. So it's probably not the greatest risk reward to lay out aggressive shorts. But if ever there was a time to look at vol sub 20 across all of these things and say, all of them, the NASDAQ is probably the one with the most bearish signaling and the best risk reward relative to immediate support levels. If I'm looking to sort of consider the possibility that maybe sentiment has finally peaked, you can buy put verticals very cheap here. And you could introduce duration into those put verticals that helps to buffer you from near-term volatility and still gives you excellent risk reward if something asymmetric occurs. And ultimately, if you have to let it expire worthless because the stock market doesn't care and powers higher, and you take a loss of 1 to 2% of equity, so be it.
The key development for me is the fact that the NASDAQ lost 23,440 or so. We had the pivot highs here over the past week. We break out, we hold that support. We got the big rally up there. Just for what it's worth, this range 23,100, 23,440. That's 330 points, 330 on top of 440 gives you what, 770.
Mm-hmm.
So last night we hit a high of 23,845. The measured move technically completed overnight before we pull back in. Now that we lose 23,440 again, support comes in back at the former swing highs in the short-term basis. You have that low intraday on July 22nd at 23,108. I called it 23,10.
Yeah.
Okay, so we have something.
That's about where I've got it.
We have structurally. That's to work with here for the S&P. It's a similar setup. It probably means you got another 30 or 40 points to the downside, a 0.5% or so before you start to find some support. But the big picture, Ilya, is right now, as we reconstituted a few days ago, if this is indeed the trend that we've been in for the past several months, going back to just around the time that the US and China agreed to a truce in Geneva in May, we've been bumping into the top side of this channel for some time. And this uptrend that we've been in since May, a 3% pullback from here gets you close to 6,200. And then at that point, you'd have been more than 3% off the highs. And you can make the assumption, okay, we now had a 3 to 5% pullback. Is this something I'm interested in buying the dip on? And when you get there, maybe it's mid to late August and you have yourself looking at September. And if you start to break down from there, then you have your September spook as one usually does. But taking this methodical right now, I think is the most important thing. Look at how much money some of these tech companies are making. I think the growth scare, though, is the big point. Now, I don't know if it's materializing. I want to just be clear about that, because if you're looking at the data are still very muddled. You can't ignore the fact that third quarter GDP tracking began today, Ilya, and the Atlanta Fed, which, to give them their accolades, their flowers, they had a 2.9% expectation for 2Q.
The Atlanta Fed really nailed it here.
Yeah, the Atlanta Fed was really nailing it. 2.3% is now their third quarter. So they're not saying that like, okay, second quarter was just an adjustment. Maybe there's still adjustments happening because of government spending and exports, imports, tariffs, but they see underlying growth at least holding up for now still. Mm-hmm. I guess that begs the question. I want to go over to Apple real quick here because I see that we're talking through things. Apple, is this up a little bit? Looks like it's up a touch, actually. That might be nice. Directionally wrong on both, Chris. Good assessment. Apple earnings. Let's see. Maybe not. No, I guess I haven't seen anything.
No.
Just the market getting a little jumpy. Okay, 4 more minutes. Non-farm payrolls tomorrow.
Yes.
Jamal and I were speaking. He thinks that this is going to be a decent enough report. It's not going to bother the market. Tom was a little surprised when he saw that the implied move on ES through the end of the day tomorrow is basically 50 points in either direction.
Mm-hmm.
That's not necessarily what we've seen going into recent non-farm payroll reports. It's been
Right.
27 to 30. Why do you think the market is giving extra weight to tomorrow's report?
Well, let's do just a little bit of sequencing. What have we seen all week? Fed rate cut odds have diminished, and the Fed endorsed that idea for this year. They have likewise grown for next year because the markets want the cuts. They think the cuts are necessary, and they don't appreciate this delay. That they don't appreciate the delay tells you they see some reason that there is concern about growth. And frankly, the second quarter GDP data doesn't do much to dispel that idea, despite the headline number of 3%. Because once you strip out all of those distortions for imports going from surging to nothing, inventories starting to come down and pull down investment numbers, because we're finally starting to spend out of those inventories that were front-loaded in the first quarter. By the way, we're not refilling them at the higher prices. That tells you what wholesalers think about demand. But most importantly, we saw the weakest 6 months of household consumption this year since the first 6 months of 2020, the COVID recession. And that's 68% of the economy. So the markets were validated in thinking, you know what, I think, or we think there's a growth risk here that's mounting. Because that's the part that matters when you take all of the noise out of the equation. So the markets want these cuts. We have since gotten a spate of relatively good corporate news, and the markets plainly don't care, but for episodic jumps, as we just saw, and as we just talked about, Meta, Microsoft, even Amazon. That one couldn't even manage an episodic jump. So when we look at all of this together, we end up with the idea that the markets are thinking macro. They're worried about growth. They want clearance for the Fed to get a move on. And so, of course, a number that speaks directly to the Fed's mandate is going to be of critical importance. This is what they care about. This is what the markets are paying attention to. And if they get a number that's really weak and gives the Fed clearance, I think the markets will embrace that ultimately. They might get spooked at first, but I think anything that gets the Fed out of bed finally is going to be greeted. But if you get a number relatively in line with forecasts that's middling and softer, but not bad as such, the bleeding and the death by 1,000 cuts continues because the Fed doesn't meet again until September. They would need to start talking very loudly in this direction or that to have any kind of impact at this point, and Jackson Hole is a month away. So at this point, if the number is really, really strong, then the market's growth concerns can get put away, and the market can feel good about saying, you know what, the Fed's waiting, but that's all right. The economy is fine. And if the number is really weak, they can think, oh, good, the cavalry is coming.
I think our Apple earnings may be out, Ilya. Let's just see.
Here we go.
EPS 157 versus 142. A little beat there.
Not bad.
Let's go to the 5-minute chart. Revenue of 94 billion, beating expectations of 88.9 billion. Beat there as well. See the guidance. Lots of individual things here first. Greater China sales, 15.37 billion versus 15.12 billion expected. The net sales overall were 44.58 billion versus 40.22 billion. iPad sales, Mac sales, those all undershot. Wearables, home, and accessory sales also undershot, 7.4 billion versus 7.82. So, I mean, Ilya, maybe there's a story there. People are upgrading their phones before the tariffs came, but then stopped buying everything else. I'm looking for some guidance right now, but share prices are up slightly, 211 here. We closed at 207.57, now in at 211.30. A little bit of a lift for the NASDAQ futures coming out of all of this between our original earnings for Amazon and now Apple trying to find some sort of a low after today's, 400 point move off the high. So tomorrow's non-farm payrolls report. If you're thinking that it's a good news is bad news kind of day then for the stock market doesn't want to know it's going sailing for the next 6 weeks until the September 17th Fed meeting without at least someone looking out for them. And by opening the crack a little bit more, are you suggesting that the data's on the softer side? It's not bad yet, but you know what? By the time the Fed gets here, they're going to have to cut. Okay, help's going to be coming. Is that really the best case scenario for stocks?
I think what stocks want here is a tail outcome. They either want something weak enough to wake the Fed, or strong enough to convince them that what the Fed is doing is tolerable. And if they don't get a tail outcome, if what they get is a middling outcome, which unfortunately for risk sentiment is also the likeliest outcome, then we end up with something that helps no one, that inspires no one, that keeps everybody's concerns in place at the same time that it tells them, good for you and your concerns, you're going to have to sit on that maybe past September, because the Fed is just not coming to help you unless there is a flashing red warning sign on the economy somewhere. And so at this point, either the market is shown that the Fed is right to be delaying. And by the way, the Fed doesn't think the Fed is right to be delaying. You heard this from Powell. He said, look, there's real emergence of risks to the jobs market that we see, but we just cannot be cavalier with inflation risk from tariffs until we know more. So either something on growth is bad enough that the Fed is spooked and their risk-reward math changes, or they're going to let the economy wait it out on these inflation risks. And so that's really the biggest issue here, is we're going to have to look at a situation where either the Fed is going to get their motivation or the markets are going to get a respite. But both of those things are tail results.
Once we get through non-farm payrolls, and I'm just going to get some different ticker up here on the screen, Ilya, once we get through non-farm payrolls, what's the most important thing for the market next week?
I think as we look at this next week, obviously there was a absolute flood of data this week for the markets to digest, and they've certainly responded accordingly. We've gotten a lot of volatility. We've gotten a lot of responsiveness. We're going to get a bunch of other sort of not necessarily lesser data points, but sparser data points. We're going to get revisions of S&P PMI data. The ISM services report is coming next week. We haven't even mentioned yet that the manufacturing one is expected to give us the 5th consecutive contraction in manufacturing. That comes out tomorrow. We'll see if that helps. Then we have a Bank of England monetary policy announcement next week that's interesting for the pound, but maybe not a whole lot else. And then it's pretty much it then, which makes next week actually very interesting. I should, by the way, point out we also have Eurozone inflation data that's coming out over the next 24 hours that might have some delayed digestion, but again, relevant for the euro, maybe not much else. And then next week, Chinese import-export data also. That's a good input into overall global growth considerations. But in general, it's a little bit sparser next week than it was this week. And I think what that gives the markets, interestingly, is some room to digest all of what they've seen. And we're seeing the price action rebel against the news flow here already, at least as far as corporate earnings are concerned. And we see the markets look at economic data that they've seen and go, you know what, we're going to see the grain of salt in this. We're not going to attempt to justify a positive view. We're going to attempt to justify a negative view. We're going to elevate one kind of a thing within the data because the data is, as ever, open to interpretation depending on what you wish to see. And we're going to emphasize this downside risk. You see it in the growing rate cut expectations. You see it in the unwillingness to rally on earnings, et cetera, et cetera. And so when you look at all of that together, you kind of get a sense for the path of least resistance that's starting to emerge. And without the benefit of big headlines next week, or at least sparser big headlines next week, the markets may be left to their own devices for more of what happens next week. And if this is the path of least resistance that's emerging, then that's not happy news.
How seriously should we be taking the tariff deadline tonight? Because it seems like that's also ignored, not discussed today. I mean, I've been following financial media all day. People have been talking about the tariff deadline as, well, we already have things sorted with Japan, South Korea, Europe, so who cares?
And we've already apparently pushed the can down the road with China, which is another big one. And
Mexico.
And Mexico. And Mexico. I suppose the biggest concern here might be the situation with Canada, but ultimately Canada is not a big enough economy to really sort of spook things to the extent that something like a Japan or certainly the EU, certainly China might have, were that to be a rupture. I think very interestingly, we saw that the president made some really interesting exemptions from his copper tariffs, and copper crashed. And then the president imposed 50% tariffs on Brazil, and those markets rallied. So I think the market is maybe starting to kind of discount all of this to focus on the macro and to basically say, okay, well, yeah, there's a deadline. There's a bunch of countries that are going to get letters. Those letters will probably say that the tariffs are going to be whatever they are. 15% looks like it's emerging as the new baseline. But these are not the kind of huge economies that everybody is going to have a terrible amount of concern about impacting the global macro pie as a whole. And so it is an important deadline, and of course has tremendous potential to surprise, but it doesn't seem like this is going to be a Liberation Day type shock.
Liberation Day like shock. No, I don't think it's going to be either. Although I'm the guy who said that Apple was going to be down and Amazon would be up here after earnings. So what do I know?
Yeah, but look at Apple on even a 4-hour chart, and it hasn't really gone anywhere.
Yeah, what's a 1% move between friends? So I find it very difficult to think that tariffs this time around are going to impact if they get into place. Directionally, when we're going here in April, It's more of the ratcheting up in tariff world. You look at Trump funny, he gives you another tariff kind of situation.
Yeah.
And every day we're one step closer to the edge and he's threatening us more. And then here come the tariffs and it was escalating. There's no off ramp. We're not looking at the market. Wall Street's had the past 20 years. It's now Main Street's turn. We had all those cliche things.
Yep.
And the rhetoric this time is, yeah, the tariff's going to be around 15%. I'm sure we're going to work out a deal. Don't worry about it. It's much softer directionally. So when they do go into place, it's like, yeah, they're going to go into place, but we're still going to talk. I don't know how much juice there is for that because it's still the market's condition that, well, absent materially negative economic impact or deterioration of corporate earnings, then this is something that we probably could just take in stride. So I don't know if we get the tariffs in play tomorrow and then you have a Monday market open with the NASDAQ's -2 because we couldn't solve our trade situation with, Ecuador and, New Guinea, for example.
Right.
Everyone else is a different story. But the encouraging signs for today's market, longer term, the dollar is still very much in the catbird seat here, Ilya. It is extending its gains versus the pound. It's extending its gains versus the euro. The Japanese yen has finally collapsed. Thank God.
No, the BOJ certainly did not help the yen overnight. Governor Ueda came out very, very dovish. Even, by the way, relative to forecast that the BOJ issued, because initially the BOJ made the announcement, they increased their inflation expectations, and the yen actually rallied. And then Governor Ueda came out and said, okay, no. You got to go the other way. Thank you very much. And the yen has since cratered.
Well, Japan's in a really interesting situation because the primary driver of their inflation right now are rice prices.
Yes.
And if you were to say in a normal situation, Japan just import more rice. But they don't want to do that because rice is considered a national staple. It's a point of pride culturally. And they want to have the high prices incentivize more domestic production. So if the BOJ were to hike rates in response to not enough rice supply, would that help incentivize or disincentivize new rice production? It might make access to credit more difficult to come by, thereby making it more difficult to grow more rice. So you have this unfortunate situation now where real Japanese rates are effectively falling out because inflation's going up and the BOJ is saying, yeah, we can't push up nominal rates to match them. So bad for the currency, a currency that obviously still has a very crowded position here, Ilya. The euro, the yen, the pound, all very crowded. How far can the dollar go? Is this a tactical bounce or should traders start thinking about something more? We've gone from the low 96s or mid 96s, I should say, up towards 100 now. Over the course of July. It's a nice, greater than a little bit more than a 4% move, but we have not yet seen a path back to 110. How does the dollar fare in the month of August from your particular perspective?
In my mind, we're in the midst of a dollar recovery that isn't done. I think a lot of what we saw in the first half of the year had to do with sort of structural reasons. Obviously, the Fed has only delayed rate cuts, and the dollar nevertheless had its worst 6 months, perhaps on record. And so when we look at sort of what's behind that, it's not difficult to start to imagine that we had a serious spook vis-a-vis the tariffs. At first, it became a spook about we're going to have less global commerce. And of course, if global commerce is fundamentally transacted in dollars, then less global commerce means less use of dollars. This is not shocking. And so what you end up seeing is first a slow decline, then a faster one, and then a slower one again, while stocks rebounded from April's pain points. The dollar very clearly did not. It just went back to slow decline mode. And that's because the faster decline was about, oh my God, we might see the US purposefully crash its own global financial order. But once it became clear that, in fact, the administration does have some amount of market discipline, does respond when the bond market gets quote unquote yippy, we can go back to a slower decline whereby we're not going to crash the car. We're just going to slow the car a lot. And so we're back by the middle of the year to this idea that we're going to have less global use for its primary commercial currency. That story seems to be all in the market at this point as these tariff plans get cemented. And now we get back to currency brass tacks. The US, with the Fed delay, has the highest yielding currency of the majors, in some places by a fairly significant margin. And so, and with, for example, the Eurozone inflation data this week, we've seen Germany already, we'll see the region as a whole overnight. The sense is that they're not exactly rate hikers next year, despite the fact that they're probably almost done cutting. So we're probably getting back to a dollar that has significant room to recover now because it has yield advantage, and the risks to its sort of structural underpinnings seem to be fading. I think there's more to go here. I'm probably very long now. I've gotten short the Canadian dollar now. I've upped the bet on the Australian dollar, and at this point, that's in my mind the path of least resistance until further notice.
Ilya, it was just you and me today for overtime. We were fortunate that we were able to get Yumi and Radigan together yesterday on the show. So we're going to wind this up a little bit early so you can catch your breath and get ready for your next macro money segment. Non-farm payrolls are tomorrow morning, 8:30 a.m. Eastern, 7:30 Central Time. ISM manufacturing will be 10 a.m. Eastern, 9 a.m. Central Time. We've gotten through what's been a very busy 2 days so far. It's acronym week, earnings week here. GDP, FOMC, now NFPs due up. Ilya, you're going to be back in a few minutes' time. Get some water, folks. Get a quick rest. We'll see everyone on the other side of a quick break. You're watching Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cuts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Are there any names in the Mag 7 that you do not think will be there a year from now?
Tesla. Tesla's been like waiting to get booted out of the Mag 7 for years now. Like it's on it. I mean, maybe it'll make a comeback. It kind of did, but I'm not expecting it to be around much longer. I don't know.
Jeez. For the sake of argument, I'm going to say Apple.
Probably Tesla.
Ooh, toughie. No, you know what? Maybe this is a contrarian thing. I think they're still going to be there in a year.
Oh man, can't ever go against the family. They're all here to stay.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
inherently tail risks. Whereas the middling result, the one captured by the meat of the distribution, the belly of outcomes, probably falls somewhere around these median forecasts. And these median forecasts essentially offer nothing to anyone in the sense that they are weak enough that they do not dispel the market's growth concerns, and they are relatively steady enough that they are not likely to inspire the Fed to quicker action. And so they leave the markets with a kind of festering concern that the Fed is going to be too slow to countervail an economic downturn that is already showing itself. And the price action in stocks and in the dollar, which has rallied aggressively off its mid-year lows around this idea that the Fed is going to maintain a yield advantage between the dollar and other currencies for longer, all of that seems to suggest that the markets are vulnerable to that kind of an outcome, that there is a degree of disappointment and of cashing out that becomes a risk were you to get middling numbers that basically give the Fed cover to wait at a time when the market does not want them to. And on top of this, as though that were not enough, the ISM survey of business confidence is on the menu. And here you get another kind of polarizing set of circumstances, as though to aggravate what might come of the jobs data. The Institute of Supply Management is going to publish its survey on manufacturing. The expectation is that we'll get up to 49.5 on the index. This is, as ever, just like the numbers for other PMIs, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so what you see here is we're well below 50 for 4 months now, March, April, May, June. The July number expected to be both below 50, but also the least below 50 in 5 months. So we would get another contraction, but it would be the second consecutive month of improvement in the sense that the contraction would have slowed, and it would be the narrowest contraction since the last time we saw growth back in February. This is the last reading above 50. So in a sense, what we'd end up with here is, again, a result that offers no amount of clarity on when the Fed would feel itself compelled to move, because it would be a nominal improvement. But at the same time, it would keep broader growth concerns in play, in that it would be the fifth consecutive contraction in the U.S. manufacturing sector, a place where you would expect the impact of tariffs to be the most acute. So with all of this in mind, the price action we now see in equities ought to be doubly concerning. Because if the likeliest outcome in this data is disappointment for risk sentiment, well, the markets are certainly showing that buoyant corporate reports are not enough, at least so far, even when we look at blockbuster companies like Microsoft and Meta, to get the market's eye off the macro ball. And where that ball is rolling may be a place wholly untoward if baseline expectations hold. And that is Macro Money for today. We are back to full schedule here, Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour on Mondays and Fridays, on with Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and opining at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome back to Risk and Reward of the Week. Today's Thursday, close to the end of the week. It's been pretty volatile. We're gonna get into some hot topics of today to get your guys' thoughts on it. But how we doing so far into the week, Gus?
Yeah,
some hot topics.
Doing well. Yeah, hot topics for sure. We were just having a highly inappropriate conversation that Errol took right up to the to the buzzer here. But yeah, no, doing good. It's been a horrendous week for me in the market, I must say. You kind of hit the nail right on the head talking about with your risk of the week with SPY with 5 straight green weeks. We were due for a little bit of a week of breathing. We just closed our 3rd straight red day today, and that comes after Meta and Microsoft both blew earnings out of the water this morning. Yeah, not even that was enough to prop up the S&P for the day. So yeah, it's we finally got a little bit of chop, and it's not even really like a breathing period or like this considerable downturn. It's just like we finally aren't going up every single day anymore.
We had a really large move after the bell yesterday. We gave a lot of that move back today. I mean, it always feels like the sell-offs feel a lot more aggressive and a lot more intense than the moves to the upside do. So excited to get into that today. As for the market, I mean, I do have a few positions on. I was short on one of the earnings for Meta yesterday, and I mean, they blew it absolutely out of the water. So we still got the UAL position on. That one was from earnings, and I'm still sitting break even on that. So we'll get into all the details there. But it is Thursday. We do have some topics to talk about. And you heard about any of the Sydney Sweeney topic buzz drama going on right now?
Yes, who hasn't heard about the Sydney Sweeney, all this buzz going on right now? It's this really interesting amalgamous thing that has some people very upset, has other people celebrating for a whole variety of reasons. And yeah, we're gonna dive in and talk some Sydney Sweeney. If you guys aren't familiar, I'm a big Sydney Sweeney fan myself. For her acting ability.
Of course.
I just think that she's a wonderful actress.
Absolutely.
That's it. There's no other reason. No ulterior motives here.
Absolutely.
I think she does great work in commercials. I think the Dr. Squatch commercial where they put her bathwater in the soaps.
Right.
I think that was funny.
You know,
it's
it's
a good marketing campaign.
It was good It sounds so outrageous, but I think that's what marketing is at the same time. Good marketing that pierces through the noise, but at the same time, the bathwater. Can you give us a little bit, real quick, as we get into it? And I think it's funny because I think it's culturally relevant. Give us a little insight on what was that bathwater in the marketing for Sydney Sweeney, those kind of things.
Sure. Let's go even broader. Sydney Sweeney, if you're not familiar with her, she is a very successful actress right now. Perhaps, probably a top 10 most successful actress that's out in the world right now. She came up, she's been acting since she was young. She came up on Disney Channel and then jumped over to, did we decide it was Riverdale? No, it's Euphoria.
It was Euphoria.
Got her first big adult role on Euphoria.
That's when I initially found out.
Yes, and that is when she initially shot into relevance was through her role on Euphoria. She's done a number of movies since. She just, I know she had a big rom-com that did really well last year. And she is very attractive. So lots of companies have, I guess, gotten her for marketing campaigns to lean into the fact that she is very attractive. And one of them was Dr. Squatch, which is a soap company. They make soaps that they say are natural. I actually used Dr. Squatch soap for a little while I was in high school, but it really dried me out. So that's my personal take. But I got eczema and stuff, so I kind of need, I got a dermatologist recommended soap now. But she did a marketing campaign for Dr. Squatch soap where they were taking her bath water and putting it into bars of soap. And that was the entire marketing campaign. Low-hanging fruit for sure, but also, as Errol alluded to, in this day and age with marketing and with everybody having the ability to market on social media freely and however they see fit, you kind of do have to do something to be able to cut through all that noise and get people buzzing about you. And companies seem to be finding that Sydney Sweeney is a good way to do that.
100%. And I think with the bathwater, I wanted to bring it up, the fact that it was culturally relevant. And don't worry, guys, we're gonna tie this in. So what does this have to do with the market? We'll talk a little bit
This
about
has strong market ties, people. Just bear with us.
But I do think it's really culturally relevant just because, what's funny? The bathwater is so outrageous just to even think about. They know that. That's why these headlines are going to be buzzing. The bathwater came from TikTok comments. If nobody else knows that, right? If you're a Gen Z and you're reading up in those comments, that was a joke initially.
Oh, yeah. Like, let me drink your bathwater.
Right, absolutely.
I would do XYZ just to be able to. Yeah.
Right.
Exactly.
So this is where it came from, just to add a little bit of context. Because if you think about it.
Simping is a new phenomenon as well. Yes, correct.
So with the whole bathwater thing, it might sound like it came out of nowhere, but it was actually really culturally relevant, especially if you're a younger individual on TikTok looking at the comments section. So.
Yes. And I do think credit where it's due. I think Belle Delphine invented the bathwater thing. I think she was the first one.
Was it?
I think she was the first one that was ever out here selling bathwater. So shout out to her. But again, I think that was created from the prominence of that sort of commentary. Yes. So selling bathwater. Guys, don't buy bathwater. Don't buy bathwater. Don't buy cans of farts. Don't do any of these things. Don't, please.
And if you do, just take it to the grave.
If you're ever thinking about it, think about me and don't do it for me. I'm asking you personally. But let's dive right in here. Sydney Sweeney has great genes. Sydney Sweeney made headlines this week following a raunchy ad campaign with American Eagle. But is the outrage justified? And more importantly, what impact did this have on the market? That's a big one, a way bigger one than you would think from an ad campaign. So let's dive right in here. So first and foremost, the ad itself. Sydney Sweeney is running an ad campaign with American Eagle right now, and the tagline for this entire campaign is Sydney Sweeney has great genes. And they spell jeans with a J. American Eagle sells jeans. That's
off the bat. When I saw that, I was like, oh, it's fire marketing. I was like, that's a bar, and that was my initial reaction. Yes. Before reading any comments, anything like that, I was like, wow. Give that intern a raise.
Yes, exactly. Whoever came up with this, I absolutely agree. American Eagle, obviously, jeans are one of their primary products. Sydney Sweeney, an incredibly attractive woman, obviously has good genes with a G. This is a fun little tie-in that came about. But they took a raunchy angle. They leaned into her sex appeal, which is something that she has, expressed that she's comfortable with. And more power to her, by the way. I will say, I said to Errol earlier off air, if I were Sydney Sweeney, I would be doing the exact same thing. I can't imagine how much money they paid her for this. Yeah, exactly. So here's a few screenshots from the ad campaign itself. There is many, many more. I was able to source like 8 or 9 different cuts that they did of this ad earlier this morning. But these 3 screenshots along the top are from what's going to be our specific advertisement.
So it was like frame by frame.
Yeah, that's going to be our specific advertisement of interest for the day. This is the one that has created a lot of outrage, and it has not, and this is important to emphasize, it has not created much outrage because she is leaning into her sex appeal.
Right.
People rather are upset about the jeans comment,
right,
which is the bigger issue. So kick us over here. Tell us about the backlash, Errol.
We got a little bit of backlash. If you were on Twitter today at some point, as we've seen in the comment section right here, you did see Tom in a very similar outfit. Don't be alarmed. But as we get into a couple of these tweets, this is where a lot of the criticisms really came from. I mean, over here we have it comparing it to, the sex workers a little bit. Sex workers equals heroes and Sydney Sweeney. So hard to see the comments on that one. But you can see a lot of the backlash from Sydney Sweeney sexualizing herself. And you made a comment that I want to piggyback a little bit off of earlier today, was the fact that, times have changed. It is 2025. I think we have to take into account what the younger generation is a little bit more comfortable, what's a little bit more socially acceptable. On that topic, I think it is a little bit more supported. So I think it is a little bit hypocritical to push back on the sexualized angle that people are taking the criticism from on Sydney Sweeney, because at the same time, the younger generation, or at least our culture, we support that a little bit more. So it does kind of seem like a cultural hypocrisy at the same time. So that was my initial take from some of these screenshots and criticisms that we see.
Yeah, that's absolutely something. And it's like, it's this initial reply from this Volo individual on Twitter here. Does Sydney Sweeney do anything besides sexualize herself? And it's like, yeah, if you want to take the stance of women should not sexualize themselves for profit, I can absolutely respect that, but you better hold that stance across the board.
Absolutely.
Like what I was saying to you earlier today is you can't say this about Sydney Sweeney, and then when you're one of your girlfriends says that they want to start an OnlyFans, say, oh, yes, queen, do that, get your bag. You have to pick one lane or the other, and as long as you're consistent in it, I can respect whatever your viewpoint is. But yes, this Jack Mack individual then draws great attention to the point that is sort of a hypocritical stance to take, especially in the modern age. So yeah, that's the sex appeal side of it. Let's dive over into the I don't know. I don't want to use the word woke.
More backlash.
Yes, but the heavier backlash side of it. Many people were very, very upset about the jeans part of this and insinuated that because Sydney Sweeney is a white woman with blonde hair and blue eyes, that this somehow was Nazi symbolism or has Nazi undertones. Now, I don't get political on this show ever, and I don't think this is a political comment that I'm about to make. I think that is ridiculous. And specifically, the specific quote is, she said, I have great genes and my genes are blue.
Right.
And then people are taking that and interpreting it as she's talking about her eye color, eugenics is mentioned, dog whistles, all these buzzwords that people like to use these days. But it's just not that. Like, this just feels like as we said at the beginning, it just feels like a good campaign to me.
I've been offended at things before, and typically if I'm ever offended at something, if I'm honest with myself, at its core, it's rooted in insecurity, right? So I think that whenever we see takes like that online, it could be, if we crank the data, it could be rooted in a little bit of insecurity, and that could just be like the initial reaction. Completely agree.
Yes.
Right.
And I would be inclined to agree with that viewpoint, especially as it pertains to her sexualizing.
Right, absolutely. Yeah.
Yes.
Yeah,
because
100%.
she is obviously incredibly attractive, and perhaps insecurity plays into that. And I think that it could absolutely be true here as well. I'm seeing engineered outrage in the chat. I think that's
it's like human behavior.
Vernacular.
When humans react to certain things, another attractive woman, it could cause a little bit, depending on how we market her. Also, with the bath soap, I think she also realized, or their marketing team, her whole team probably recognized her name was catching so much buzz. The bath soap was the first thing, right? And American Eagle and some other ads came after that. So I think they noticed that, wow, this towing the line with our marketing is working really well. And we ended up seeing a breakout with that American Eagle ad.
Absolutely, yes. As we're about to get into here in a second. And, And I mean, no big deal. And the point is, though, that we are sitting here talking about this right now. I mean, that means that this is a good advertisement. It gets people talking. It creates brand awareness. I don't know when the last time I even thought about American Eagle was. And actually, I know.
True.
I can tell you the last time I thought about American Eagle, and it's when they signed Addison Rae in like 2021. So American Eagle doing good things, with their marketing. But anyway, let's we can dive over here and let's talk about the impacts of this.
We got a little bit of impacts on the American Eagle. Shares surged 23.3% from $9.65 to $12.20 after the new ad campaign that sparked a lot of outrage. Shares have since settled around $11. It's a pretty cheap underlying, not too expensive, but it still reflects about a 14% gain driven purely by this campaign that we've been seeing. No reported sales boost or change in fundamentals. So purely, we don't always know exactly what moves a stock. We don't exactly know why people are buying and selling, but with no fundamental changes or no new news for American Eagle besides their campaigns, I think we can credit this recent volatility towards what's been going on with Sydney Sweeney.
Yes, absolutely. And it's insane that this kind of move can even happen. Even if American Eagle gives all of these gains back and they wind up just settling back in at their share price, which logically they should do. Nothing has changed about the fundamentals of the company surrounding this until we see more sales numbers or something like that. But the fact that a single ad campaign can have this type of impact, can swing you up almost 25% in the stock market, is insanity. And it's purely because of the ad.
Yeah.
So yeah, moving forward, is this brilliant? Starts to become the question. American Eagle shares are currently sitting up 14%. Searches here, that's this top blue line Google Trends bar here. Searches are up 500% for American Eagle in the last, in the last month, I should say, rolling month. This collab, it trended for 2 days on Twitter, X, it was everywhere. And yeah, ultimately the controversy has just boosted the brand of both people. There's a ton of buzz everywhere, including right now as we're sitting here for Sydney Sweeney, for American Eagle. Search results are way through the roof. Obviously, brand awareness has increased and you tangibly increased your market cap. I mean, what more can you ask for out of an advertisement? That's more than you usually can ask for out of an advertisement.
100%. I mean, it kind of sounds like we're going back to some of the marketing that is really toeing the line. I think that gets a lot of engagement, that gets a lot of traction. I think really what it comes down to at the end of the day, to just based off of pure personal speculation, is I think marketing teams are getting with the times. I think that's really what it comes down to. I think marketing teams are learning social media a little bit better. I think most marketing teams are recognizing that to be competitive, you have to be on social media in some capacity. So I think we're kind of seeing a change in just the marketing culture, because I think it's like the Titanic. It's like a big moving ship. It's like it goes from the TV running ads. Now it's like these companies don't even have budgets to give companies that are looking to be on TV anymore. Now it's switching to social media. And now a lot of these people are getting the budgets for that. So I think what it really comes down to is just a shift in a lot of the marketing culture.
Absolutely. And I think there's also a major factor of, knowing your clientele. And obviously you would never want to do any advertising that alienates your clientele. That goes without saying. But beyond that, yeah, American Eagle recognizes that their clientele, the people that they're trying to appeal to, are culturally aware of Sydney Sweeney, are primarily on social media. And I think that Sydney Sweeney's management team is starting to realize that they kind of have a modern day Marilyn Monroe sitting here, and they're, taking their opportunities to leverage that. I don't think it's a shortcoming on the
Or do you think, I just thought about this, you think they missed their target audience and it blew up even more?
Perhaps.
Or maybe their target audience helped prop up the attention and then it garnered more attention. I don't know, but it's something to think about.
I mean, fundamentally, I think that modeling with clothing companies, and regardless of gender, both ways, has always been about showing attractive people wearing your clothes and trying to insinuate to us, the viewer of the ad, that, oh, you can look like this too if you wear our clothes. And so I think that they haven't really changed the model all that much. They just decided to be way more direct about it.
Right.
And
Great point.
I think that that's an interesting angle to take.
Yeah.
But yeah, that's what we got on the slides for Sydney Sweeney.
Oh yeah, we'll check it out. American Eagle's a lot cheaper underlying than I would have expected. It's not something I was personally trading. But
yeah, American Eagle and Abercrombie, those are the middle school, high school staples.
Yo, wait, Abercrombie, I feel, has gotten a lot more popular in like the last 3 years.
You think?
I think so. Unless I just wasn't with the time. Like, I don't recognize I haven't been with the times in certain regards until I hang out with my brother. To be honest. Like, T.
Sure.
Yeah. But no, I digress.
Yeah. Well, yeah. It's like having Thomas out there. Like Thomas,
right?
He makes me.
It's
feel
like
old.
little
I know
things.
You're watching Thomas.
Right,
we love you. But yeah, these little like nuanced things. It's like
it used to be like that was me. That was me. I don't know how I missed that. That was me.
It's funny. I guess we're just having a conversation about aging in general here now, but it's funny because I always kind of had this idea, like in high school and in college, and I would say I was still with the times or whatever, and I think I still very much am. To
all right, old man, calm down.
Yeah, exactly. This guy's born in the 1900s trying to talk shit to me. But I think that I always had this idea that, oh, well, all these ideas are exchanged on social media, and I have no, ideas about leaving social media anytime soon. So I will probably stay with the times. But what I did not account for is that my interests and the people that I follow and what the algorithm feeds me on social media will change. And suddenly these, the things that are being created from shit posts just don't appear anymore.
So there's one of my favorite quotes is the fact that the stock market is a direct reflection of yourself. And I feel like we could say that your algorithm is I don't know, maybe that's a reach. Your algorithm is a direct reflection.
I mean, it is
a little bit.
It's supposed to be.
It's supposed to be, at least. We do just have a few more minutes left here. Anything else to add on the comments with Sydney Sweeney, American Eagle? Anything else you got on your mind heading into the end of the week, Gus?
I think that there's a lot of people who wake up every day and go out into the world and look for things to be offended about. And I think that is a sad way to live life. And I think, if you are one of these people who is offended about this, I beg of you, go outside.
Yes.
Please go outside, experience the world. People are actually pretty chill across the board.
So one thing that I have noticed is in my 50 years of life is typically when others
you're like 10% older than me. Give me some sage advice.
Well, I've noticed typically when others are acting or have actions that kind of spill onto you a little bit, or someone is maybe lacking some self-awareness here and here, typically they're going through something on their own. Like typically whatever it might be, and then it's just spilling onto you. And I think a lot of the times then we'll latch on to a lot of these things that help us feel in the current state that we feel. Oh, negativity, I feel that. So I can latch on here. I can chew you out. I can do this because I'm in that state. So a lot of the times I've also recognized that. So I think it's just a check. Like if you recognize you're scrolling on social media and you're getting offended and like it's working you up, just take a quick moment and pause and be like, yo, this isn't a way to live life, first of all. And then second of all, it's a key to look inward. So I'm gonna leave it with that.
Yeah, absolutely.
Because I find myself getting riled up sometimes about stuff I see
absolutely.
online. And I'll be
absolutely.
like, whoa.
And
I laugh at
absolutely
myself
something that's come with maturity as well. I mean, when I was like 15, 16, 17, I was fighting with people in Instagram comment sections on the daily about whatever. You say something I agree with.
And you can articulate yourself really well too. So you were probably giving them a field day.
I'd give you the business. I'd break out like the specific fallacy that you're committing and all this. And at a point, I just realized that all these, it's not real. Why would I waste my time and stress myself out and get myself worked up about these things that are online? In reality, if you actually go out into the world and walk around, it ain't that bad. Everyone's very nice to each other at large. And I would further add that, there's an old adage that I still think is absolutely true in a person-to-person context that you're the average of the 5 people around you. But what I think that people haven't accounted for as we've moved into this age of social media is that those 5 people around you might not actually be great people in your life, or that all of your social media following or whoever's validating you in these comment sections or fighting back at you, that can also, those play in.
You find community outside of real world, absolutely.
Yes, absolutely. So I think that it's just important to always consider who you're surrounding yourself with, and that extends beyond just who you actually physically see or talk to on a day-to-day basis.
I see here, I'm going to have to do more research on the Sydney Sweeney woman. Our segment worked for today.
Grey Poupon mustard? I know about Grey Poupon. There's a commercial. Oh man, Dad, if you're watching, I'm so sorry. He would quote this commercial all the time. It's like, do you have any Grey Poupon? I think that's what it is. Can somebody fact check me on that? I think that's how they advertised. But yeah, that's a big thing.
I'm not a big fan of mustard. I just can't.
I was made to.
That's one thing I've never got around to.
I never really. I don't know. Mustard. It's actually just like last year. I've kind of started liking mustard a little bit. Yeah.
Dang.
When I was in Yellowstone National Park last weekend, for the first time in my life, put mustard on something.
Wow.
I got a burger.
And you enjoyed it?
Yeah. I enjoyed it. Got a burger. I was like, oh, this is it's missing a little something. That mustard was staring at me like a goblin mask.
I don't believe it. Well, that's going to wrap it up for today's segment. Tomorrow's Friday. Anything else to add before we hop on out of here?
No, nothing. Cool. This was a great discussion.
That's going to wrap it up, guys. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.